Alrighty. Welcome, everyone. Let me go ahead and waste no time. Let me share my screen here. We're going to hop in and we're going to take a look at some charts. We're going to look at the biggest charts of the day and also, because it's the end of the week, biggest charts of the week. So here we go. Let's go ahead and start things off. I've got a really nice list for us. Let's start things off over here with USD JPY. So this is the yen. This is the yen in dollars. And this is actually a really big move. If we go ahead and zoom in here a little bit, take a look at the size of this move. Now, this might not look like it, but a 2.2% move on the session from peak to trough out of the yen, that's a big deal. And so, what I've been reading about this is that it looks like there is some intervention going on with the BOJ, the Bank of Japan. They seem to be intervening to support the yen. Now, something that's really interesting here that I want to share, if I zoom out, let's just go ahead and zoom out. This is a monthly. And so now we've got much, much, much more data. Take a look. This goes all the way back to 1971. Notice this level that I've highlighted here, right there, looks like around 162. Now, that level, to me, that is an important level of resistance. And as we zoom in, take a look. You see that there? Let me go ahead and grab an arrow tool and let me just mark this. So back in 2024 in July, the yen tagged 162. And if we just go ahead and zoom in from here to a weekly, you can see that it was rejected right there at 162. So that was actually a really, really big rejection out of the yen. And, if we go ahead and take a look at what's happened recently, let's just take a look at this here. So we've got this rejection at 162. We've got, a test getting close. And then recently, here today, a big rejection at the end of the week to end the week. And if we just go ahead and take a look at this, if we zoom in, now we're looking at the yen on a daily. And so this has been a big move lower. And now that the yen has started to back off below resistance, where could it go from here? Well, it seems to me that the 200-day moving average makes a lot of sense. That comes in a full 3.91% lower. So 6 points lower. That's a big move because, these currencies, usually you talk about bips or basis points when you're trading these currencies. And so usually the moves out of a Forex pair are relatively small, especially when compared to, the moves that you might see in an equities market or even, crypto, of course, but definitely equities. So this has been a big move out of the yen. And it looks like, you might find support if the intervention continues all the way down here at like 150. So I would be a buyer of yen so basically, if you're a buyer of yen here, you could trade it down to 150, but you would want to be a seller of yen at 150. Remember, if you're trading USD, JPY, that pair, if you're a buyer of this, you're long the dollar, short the yen. If you're a seller of this, then you're short the dollar, long the yen. So if I were to say that I am a buyer of yen, I would actually be selling this pair. Okay. And you can trade this out of your DeFi wallet on a protocol called Ostium. There are a handful of others that you can trade it on. I think you can trade it on Avantis. You can also trade it, I believe, on Hyperliquid. But this has been a really, really big move. And the interesting thing about this is when the yen tends to back off like this, the yen strengthens, you tend to see other markets react also. So why don't we move on from the yen? Let's take a look at the dollar. Okay, so DXY. Man, this is a big move to end the week in the dollar. We are sitting right at long-term support. That is a big, big move. And so let's just go ahead and zoom out to a weekly so we can see this level of support more clearly. So if the dollar starts to move sharply lower, then you would expect the yen to continue to appreciate. So a strengthening yen, a weakening dollar, that may be supportive of these commodities that have just been ripping higher. Think gold, silver, aluminum, copper. So these commodities here have been ripping, and if the dollar continues to push lower, then you might have even further upside. Even though gold and silver and copper and aluminum, they've all ripped higher, especially silver and gold. But if the dollar pulls back and breaks all the way down to 90, then you could easily see, not just $5,000 gold, but $6,000 gold. Silver, man, the sky seems to be the limit for silver. Although I got to say, it really has run and it's difficult to buy it. But this level of support out of DXY, this is a long-term level of support, but this has been, and this is a weekly, this has been a big and sharp move to the downside out of the dollar on the week. So you've really got to start to take a look at bonds and notes and ask yourself, what is the direction of rates in the immediate term? And so why don't we take a look at that next? The dollar sitting at support, so you should expect support to hold. That would be my expectation here. I would expect the support to hold. But why don't we take a look at bonds and notes? Because if yields back off, meaning if bonds move to the upside, then that would actually potentially mean the dollar breaks down. So I think that's basically what we're starting to see here a little bit. If I zoom in on, this is just 30-year bond futures, treasury bond futures, and this is a daily. And so the futures are back at the 200-day moving average here. So a big week of volatility out of bonds and notes this week with all of the geopolitical events that took place. So bonds and notes reacted by expressing significant volatility. And we take a look at this 200-day moving average sitting at the 200-day. If bonds push higher, what would that mean for yields? Well, it would mean that yields would move lower. So here's the US 30-year yield. So if bonds push higher, yields push lower. And so yields are sitting at an interesting level of support. So let's say that we see a breakdown out of yields. That would mean a break up, a breakout in bonds. So if yields push lower, that would likely mean that the dollar breaks down. And that seems to be what we're about to see. I mean, this is a big red candle into the close sitting at support at the end of the week. So if we see yields start to pull back at the long end of the curve at the beginning of next week, I would expect the dollar to break this level of support. But we need to see more than just a break of support, because we've seen that before. Right here, this was a break of support, but the dollar was immediately able to regain that level of support. So if we see a breakdown here, we would need to see confirmation. So that would be something like this, where we get the break, maybe a retest, and go. Something like that. So I'm looking forward to next week to see what happens in yields and what its effect is on the dollar. Okie dokie. So let's move on from here. Let's take a look at the S&P. So the S&P here, gapped down to start the week this past week. So this was the gap down out of the futures, and we got the gap down and then immediately recovered. And the S&P did fill this gap here. So let me just go ahead and zoom in so that we can see that a little bit more clearly. Here's an hourly. And if you notice right here, between the close on Friday and the open on Sunday, the futures open on Sunday evening, the S&P gapped lower. All that means is that the close on Friday afternoon was higher than the open on Sunday evening. That creates that futures gap there. But notice where price found resistance. Price found resistance right at or near that futures gap, basically like very, very close to the tick. So that is a textbook gap fill. And if the S&P moves lower starting next week, you could say that the strengthening yen has something to do with it. So the S&P to me looks like it could back off a little bit to start the week next week. Let's go ahead and take a look now at the NASDAQ. And I want to look at NASDAQ futures here. So there are a couple of components of the NASDAQ that we're going to take a look at in more detail towards the end of tonight's call. But the NASDAQ here, just hanging out above the 200-day moving average. Now, this was the breakout. And if there is going to be any type of correction out of the NASDAQ, the first level that I would expect to hold as some type of support, we've already seen the 50-day hold as support, but I would expect if I go ahead and remove that there, I want to throw down a 100-day. So take a look at how the 100-day moving average has already held as support. And there was also a gap down on the futures open this past Sunday for the NASDAQ. And we can see that right here. In fact, if I zoom in just like we did on the S&P, we can see that even more clearly. But the NASDAQ, not only did it fill its respective gap there, and you can see that right there, that's the close on Friday afternoon. This is the open on Sunday evening, and that is the futures gap. Now the NASDAQ, it gapped down and was able to fill that gap and push higher. But the NASDAQ, really, I think it was the outperformer of the week of the three major indices, the S&P, the NASDAQ, and the Russell. But the Russell, oh man, let's move on to the Russell. It had a big move up and then ended up giving it back into the close here at the end of the day today. So let's take a look here at the Russell. Notice if we zoom in to an hourly, look at that. Basically spent all day today just selling off. But there's that gap. There's that futures gap from Sunday. So you can see it right here. The close on Friday, the gap down on Sunday, that creates that gap. And not only did the Russell fill the gap, but it pushed higher and put in a fresh all-time high. But it spent all day today just selling off. So it'll be really interesting to see what ends up happening with the Russell next week. Now, the Russell tends to be, more interest rate sensitive items. And so as a digital asset investor, I tend to watch the Russell a little bit more closely than I do the NASDAQ or the S&P, just because I noticed that Bitcoin, Ethereum, Solana, other digital assets, they tend to be also more interest rate sensitive, although the correlation between equities and digital assets has completely broken down. There really doesn't seem to be much correlation at all. Digital assets tend to trade in their own world now. So why don't we go ahead and take a look at Bitcoin? So BTC sitting at support, sitting just above this level of support here. Now, the thing about BTC for me is this pattern looks like a bear flag to me. So if I just go ahead and I've been talking about this for a long time now, this choppy flag pattern. So we've got support here at 80. We've got the next higher level of support at 84. And then this level of support that was put in earlier this week at 87 and change. If that were to break to the downside, I think Bitcoin would check in with 75K or so. So this is a longer term bearish pattern. But if you want to trade Bitcoin, just for a trade, like short term, it might make sense to take a look at getting, maybe if you're adventurous. Now, this wouldn't be for me. I wouldn't be able to trade BTC on the long side here. I think Bitcoin has entered a bear market. And I don't think that we've seen a large enough correction out of Bitcoin yet to be able to confidently say that the bottom is in. This is only a 36% correction from the peak. So, look, every Bitcoin bear market has been, greater in magnitude than just down 36%. So if Bitcoin has actually entered a true bear market, then I would expect this level of support to break. And so for me, I'm going to be a trader of Bitcoin, ETH, Sol, other digital assets, but from the short side. So if I wanted to trade this from the short side, you could just size your position quite small and you could get short here. But I don't know that that's the best entry. Although, take a look at this. You see, this is the larger pattern. You've got that bear flag. But then if we zoom in a little bit, you've also got on, just zooming in, don't you also see the beginning of a bear flag pattern here too? So on multiple time frames, if we were to zoom in maybe to a 4 hour, you might be able to see this a little bit more clearly. And let me just go ahead and delete that drawn object there so we can see this. So on multiple time frames, Bitcoin is putting in the same type of pattern. So I would expect Bitcoin to break lower. And if it's able to break down below, 87.2, the lows from earlier this week, I think that you could see the floodgates open and Bitcoin really start to motor lower, down to like 75, maybe 74K, something like that. And that could happen quickly. That could happen very quickly. So now that we take a look at BTC, why don't we check in with Ethereum and Solana? Because we see similar patterns here. So this is Ethereum, but this is a 4 hour. Notice how similar this pattern looks to Bitcoin's pattern. We've got that flag, that bear flag. We found support earlier this week right down there at, right around 2,900 or so. If we zoom out to a daily here from a 4 hour, check this out. This to me looks like this is a bear flag, I think. And we've got that level of support right here at 2,900. If that were to break, the first stop for ETH would be, right around 2,600. But I don't think that would be the final destination. I think the final destination for ETH comes in down here at like 2,100 or so. So for me, I'm short ETH, and I'm just waiting for a breakdown. So I'm nibbling on the short side, and what I will do if we get a break of 2,900 is I will add to my shorts down to 2,600. And if we get a break of 2,600, I will add further down to 21. I'll start to close out shorts at 21. That's where I think ETH is going over the next couple of months. And that would be a move, from the current spot price, that'd be a move all the way down, maybe 30% or so. So about 850 points. 850 points times, however many ETH you're trading. If you're trading 10 ETH, 850 points, that's an $8,500 trade. Not bad. So that's what I'm looking forward to. A little move lower out of ETH. And if I'm wrong, well, you see, here's the thing. I got to always figure out how much am I willing to risk to find out if I'm right. And I'm always willing to risk maybe 1/10 of 1% or 2/10 of 1% of my portfolio to find out if I'm right on direction. And then I only add to winners. I never DCA down, ever. I only add to my winners. So that's something out of the Investor Mindset course that I wrote. It borrows heavily from 12 books. One of them is Jesse Livermore's How to Trade in Stocks and Reminiscences of a Stock Operator. Definitely worth a read. So if ETH were to bounce off of this level of support, where would you expect resistance to come in? Well, right here at the 100-day, because notice this was resistance and it held. So ETH was unable to break out above its 100-day moving average resistance. So if ETH bounces here, I would expect that 100-day moving average to offer some resistance again. So I am short ETH and I will continue to add to my shorts if ETH moves lower. Let's take a look at Solana. Solana, a little bit more range bound here, but here's the interesting thing. Solana also, just like Bitcoin and ETH, got rejected at its 100-day, but unlike Bitcoin and unlike ETH, Solana did not even touch its 100-day moving average. It got rejected below its 100-day moving average. And also, Solana is just kind of range bound here. We've got like this choppy pattern just sitting in a range between, what is that, 116 to 148. So you could just trade SOL in the range and wait for a breakdown out of the range to the downside or a breakout out of the range to the upside. I would be trading this from the short side, because if I think that Bitcoin has not yet put in its bear market trough, then there's no way that Ethereum or Solana are anywhere near their respective bear market troughs. I want to share something else that I find to be interesting about Solana. Take a look at this pattern. So if we zoom in a little bit, this is a weekly. Notice this. We've got this head and shoulders pattern, and pattern completion here. It depends on how you draw this, but pattern completion could be something like $90 or so, maybe something like that. So for Sol to check in, and let me just go ahead and remove this 100 week and throw down a 200 week. For Sol to check in with maybe $100 or maybe a little bit lower, like $90 or so, that would certainly make sense to me. And if you just take a look at the price action, the way that Solana has traded in the past, when it gets moving to the downside, it can really move quickly to the downside. This was the Trump meme coin top in Solana. And over the course of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. So let's call it 90 days. From peak to trough over 90 days, Sol moved lower by nearly 70%. So this again looks like a flag to me. All of these top digital assets are flagging off, and this is a bear flag. So I expect this to continue to the downside. And so if I just take a look at this here, how many weeks into this pattern are we? 1, 2, 3, 4, 5, 6. Looks like maybe about 12 weeks in. So if there's another leg lower, maybe we've got another 2 or 3 months to the downside out of Sol if that level of support breaks around 115 or so. Alrighty, let's move on over to XRP. I hate XRP. It's such a bullshit project. It really is. Like, the guys that run it are just scammers, man. Like, if you're dumping on your retail following to build a bag to keep your project afloat, that's a scam. And it just smells wrong. Like, they don't even have a product. Like, what is the product? They launched a stable coin, but it's on Ethereum. They don't even have any real product here. It's a fugazi. It's a fugazi. It's not real. And this level of support in XRP right here, so that level of support at $1.70, if that breaks, oh man, I'm definitely opening a short position in XRP because there's no support. Like, this move up, this is like, for what? XRP does nothing. This is basically just like, what is it, $100 billion meme coin? It's kind of ridiculous that it even exists at all. And, like, I just very, very, very disappointed that, these guys have never shipped anything. They don't ship anything. All they do is talk about partnerships and post marketing that is very misleading on X and YouTube. So I am no fan of XRP. And I think that if this level of support breaks, I think XRP probably moves down to this zone here, maybe like 50 cents ish. I think that's about right. Now, if you take a look at the 200-week moving average, which comes in right around $1, that's probably where you'd get some type of a bounce out of XRP. But you know what? This is just a nonsense project. It doesn't smell right. They have no product. They don't ship anything. And yet there's some massive market cap for no good reason. This is a meme coin. This is a do-nothing token with no utility whatsoever. And this thing should be trading for probably like 10 cents, maybe a quarter. That seems to be about right. Honestly, zero. This thing should go to zero. This is a meme. So I'm looking at, to open a short on XRP at around $1.80 or so. If it breaks, I'll start to nibble before the break. If there is a break, I'll start to nibble on the short side here at $1.80. I'll add to it if it breaks below $1.75. But this would be like one of my highest conviction shorts out there because this is a nonsense do nothing project. So I would love to see this crash and burn because it's just such a shame that crypto projects like this still exist. I want to see real DeFi and crypto projects with real utility, with real protocols that ship real stuff. And XRP is none of that. So let's move on from XRP. Let's take a look at AVAX because AVAX, this is a chain that has real products on it. And you know what? It just hasn't gotten any love at all. And it looks like if it moves even just a little bit lower, so take a look. Take a look at this level of support here. So that is basically the line in the sand for AVAX. Now, if AVAX gets down to $8.50, I mean, you could see this trading below $1 quickly. So this is unfortunately, this doesn't look too positive for Avalanche, for AVAX. So I would have no position here. I wouldn't trade this long or short. If it breaks 850, I'd get short. But for right now, no position and no real directional bias. I just wanted to share this because, I like Avalanche and I would like for them to be able to ship something really, really cool. But, for right now, it looks like it just needs to hold 850. If it doesn't, though, then, you'd really have to start thinking about like, $1 maybe for AVAX. So let's see what happens with Avalanche. All right. I want to go ahead and move on to, let's take a look at natural gas, okay, nat gas. And the reason I want to take a look at nat gas is it has basically doubled in, just like the last week or so. So here's Henry Hub futures. These are nat gas futures. And man, that Arctic freeze or the winter weather that is blowing across just about the entire United States has driven natural gas futures straight up. And so if we just go ahead and measure this from 3 all the way up to, this is an 87% move or so in just about the last week. This has been a monster move. And notice this also. So this pattern, this candlestick pattern, this is a bullish engulfing pattern here. So you've got the body from yesterday's candle. This is a daily. You've got the body, you can barely see it. It's that doji right there. So you've got the body of yesterday's candle engulfed fully by the body of today's candle. So this could, if it just bounces around here a little bit and importantly moves lower, that would be a flag. This would be a pole and the flag, which is a continuation pattern. So if there is more cold weather in the United States over the next week or two, you might see nat gas really break out above this level of resistance with some authority. And so where would it go? If nat gas breaks out above like 557 or maybe just right there, 560, if nat gas breaks out above 560, the next level of resistance wouldn't come in until like $7.60. So that would be, and it could be up there like within a couple of days, that would be an additional 30%. So nat gas, on a breakout above 560, looks like an interesting potential long play. Use tight stops though, because this is extremely volatile and the contract size is really big. So every tick is pretty big. This is a big and dangerous contract to trade. There's a widowmaker spread that uses like nat gas and crude oil. And that's, they call it a widowmaker for a reason. So be careful if you're going to trade this. Let's move on to crude oil. So with all of the ships being positioned to, it looks like strike Iran, and thank goodness for that. Like those mullahs over there, if anyone's seen the, the video content of the horrible crimes that the Muslims there are perpetrating against the Persian people in Iran, it looks as though there's a massive armada being amassed, just in that area, in that region, and probably for the purpose of finally removing those mullahs from power. And that would be a blessing for the entire world to get rid of those horrible, evil people there that are just torturing and murdering those Persians. So that would potentially mean that crude oil could have some geopolitical risk premium built into it as we expect some type of kinetic action by the United States against the Iranian regime. So with oil sitting at just below resistance. So resistance here comes in at the 200-day at $62. If this breaks out above the 200-day, then you might expect there to be some type of brief short push higher. So maybe up to like 70, low 70s, something like that. And that would be an interesting move because, you're talking about like 15, 16% or so. Use a little bit of leverage, trade the crude oil futures, and you could do quite well for yourself with like 2 or 3x leverage. You don't have to be crazy with leverage. So we took a look at the yen. We didn't get a chance to take a look at the VIX or the MOVE index, but we will starting on Monday. We took a look at the S&P. We took a look at a NASDAQ, and we took a look at the Russell. We were able to take a look at Bitcoin, ETH, Sol, XRP, the king of the meme coins, AVAX, and the dollar, of course. We ended things off here with nat gas and crude oil. So heading into the weekend, President Trump really likes to make big announcements after hours and over the weekend. So it wouldn't surprise me if we get some type of movement over the weekend. And I'm sure that it will be exciting to get started next week. So thanks everyone who was able to, join this call live. And I really, really hope that you got something valuable out of it. I will see you guys next week on Monday. Everyone, have a great weekend. Thank you.